Hi there. Filecoin is up by about 1% this week, and it seems like it's finally stabilizing above the level of 0.93. Okay, it's, I would say, a good sign after all these weeks of seeking the all-time low. So let's dive into the chart and see through the Wyckoff lens what's actually going on. If you're new to my session, I'll cover the Wyckoff stage, potential trend change for price, as well as key price levels. These are education content only, not financial advice. The weekly chart of Filecoin is showing us after 3 consecutive weeks of testing the range between 0.88 to 1.03, this week, the bulls and the bears are agreeing that, okay, we're probably staying somewhere around the 0.96 to 0.97 range. And that's why we see something like, almost like a cross over here. If we look at the volume, you can see it has been declining across the past 3 weeks, meaning no sign of whales coming in. Okay, no big moves or no big players are committing to anything. It's just the small fishes trading this range bound for 2 consecutive weeks. When March comes in, when new economic data comes in, that's going to affect the direction of the move. As of this moment, we're still within the testing phase of paper hands and diamond hands. So whales will try to shake out the remaining non-whales, or, there are many whales basically. Whoever thinks that, okay, we're going to fold our cards, we're not going to continue, then whichever whale trying to stay will scoop up those stock at these kind of low levels, assuming the project is still going to continue, because there are people always saying, certain projects is going to close, after this Ice Age period, after the 2002 to 2024 period. This is actually the real test, so to speak. So from a Wyckoff standpoint, given Filecoin is already at the mid-late stage of the accumulation cycle, we still need something like what happened back in beginning of November to come in. So either a massive white candle or multiple white candles with higher than average volume. Okay, supporting the price to once again challenge at least the yellow T level of 3.15. Okay, that's where the automatic rally was. Okay, you see the top of these 2 candles. So we want to see at least that. Of course, it's better to go even higher to the 3.47, because that's the range over there. It's not just one price point, it's a range that was tested. So that will be a sign confirming people are willing to once again come back in. But that doesn't mean the test is over, because sometimes even after a sign of strength, the whales can still shoot the price down to lower levels. Okay, just to check out the last bit of paper hands before they let the price go to the next distribution peak. Daily chart showing us that the downtrend started back in January. It is finally over. So it has been stabilizing in the range we talked about in the very beginning. Okay, I'm not going to repeat these numbers. However, you can see when the price tried to challenge the 1.03, it got heavily rejected today. So it's still a bit of sideways range bound going on, even though the breakout came at the exact indication window around the 14th of February. Right? Let's see whether that trend is going to continue, the sideways trend. Given March data isn't particularly good or bad, that should be the case. Any kind of positivity or negativity is going to throw it back to outside of those 2 levels. Right? These are not key levels, and key levels are way above. These are short-term levels set by the seeking the all-time low price actions. So they can be kind of weak, like, ice surface of a link that just got frozen. It's not like it has been frozen for a few months. Okay, so be careful what comes next. If you're interested to access these sessions 2 days earlier, join the channel membership now. Here's another analysis for you. Thank you.